is Wednesday, the 24th of June, 2020. I am Bosin Omofaye here on Frontier Opening Bell, and I welcome everyone to today's show. Let me introduce my panelists for today. Our guest, Ali Khan Sacho, who's starting from East Africa. He's joining us from Reach Frontiers, the CEO and founder. Thank you very much, Ali. Good morning.
Morning. Good to be with you again, boss.
Quite a lot of firing points this morning from the East Coast down to Southern Africa, Namibia, South Africa, Malawi, Tanzania, and of course in Kenya. The free period for free mobile money transfers ended. Everyone's looking at what the Central Bank of Kenya would do if that would be an extension, but there is no free meal even in Freetown. So let's talk about that in a couple of minutes. Then, of course, Nigeria got $750 million overnight from the World Bank via the IDA for its electricity sector. 4,500 megawatts is what the World Bank is looking at on Nigeria's grid by the year 2022. Good morning, Uche Naminis from BlueFX Nigeria.
Good morning, boss. Thank you.
And Ayode Jiebo is looking at the Nigerian market. Yesterday, we spent some time on Nigeria's FX liquidity. But today, the Nigerian Stock Exchange released the main report for market transactions, showing that local investors are doing far more than foreign portfolio investors in the Nigerian market. That's a big story. I'm sure you have seen some of the numbers, and we'll see what's driving the sentiment for the local participants. So let's get the show up and running. Well, how did we finish off yesterday on our indices, equity indices, the South African market? Largest on the continent, and of course largest by the size of the day's index gain, 2.30% on the all-share index. Kenya finished on the flip side of that, 2.84%, and the Egyptian market was up 0.2%. Meantime, the Ivorian market was in the negative territory, 0.2%. That's the composite, and Nigerian market softens just about 0.02%. Let's go to Kenya and look at the East Coast, to be more precise, but started from the all eyes on the Central Bank of Kenya on whether the authorities would extend the 90 days moratorium that was given for mobile money transfer for the COVID-19 crisis. I'm sure Ali must have been part of those who enjoyed the 90-day free mobile money transfer. I don't know what his thoughts are about where everyone will go from here. In neighboring Rwanda, the country is announcing $3.43 billion 2020-2021 budget. While Tanzania, Vodacom M-Pesa has gone global, now available as service in 200 countries and territories around the world. Take it from here, Ali.
So thank you. Let me start with a couple of political issues. Tanzania, they've arrested 7 opposition candidates. Of course, there's an election coming up in October. There are a lot of concerns about just how free and fair those elections will be. And also bear in mind, they haven't been telling us of the COVID situation now for over 6 weeks. The last numbers they released spoke to a very sharp acceleration, and there've been lots of video footage of burials at night and a lot of concerns as to what exactly is happening there. So just to mention that, then to turn to Kenya, you were firstly talking about M-Pesa. What the central bank did was allowed free transfer of amounts below $10. This is a very profitable segment for Safaricom. High velocity, low denomination money movements. And Safaricom actually said it was going to cost them about $25 million. So the issue will be whether this will just lapse and will return to normal, or whether the central bank will extend it. Given the situation on the ground, I think the central bank will come under a lot of pressure to extend it. And just to jump from there to Tanzania, your story about M-Pesa Tanzania, that's meaning that you can now transfer and remit money to 200 different countries. M-Pesa really the jewel in the crown for Safaricom and Vodacom. This is the real game changer that they also want to take to Ethiopia, essentially M-Pesa increases financial inclusion, and it's shown to have a very positive grassroots accelerative effect. So that's, I think, also their calling card when they go knocking in South Africa, in Ethiopia, which they've already announced that they are going into Ethiopia. The question is the combination of who will go with them. Here in Kenya, the big news in Business Daily was that power purchase agreements, which had been signed between Kenya Power and independent power producers, to exercise force majeure because they can't deploy the power that's being currently evacuated. This has big ramifications for the quality of the government's guarantee, because most of these contracts carry a government guarantee, and there's a lot of concern as to exactly what this might mean. Rwanda, the $3.43 billion 2021 budget, interestingly, talking about 2.1% full year growth, very much on top of the COVID situation. I don't think we've had very few deaths in Rwanda. And then talking about a sharper acceleration back to 6%. We've spoken about Kagame in Rwanda before. They know how to execute. They hear the signal through the noise. And I, for one, think they're going to deliver what they're saying.
Great. So let's just take the Kenya Power story with the purchasing agreement. And I'm sure electricity is one major issue across the continent. So that's a familiar story for Uchenna Menes, who is weighing in now on the $750 million, almost $1 billion that the World Bank is giving Nigeria via its International Development Association as a credit to deliver 4,500 megawatts to the national grid by the year 2022. This is money on the table. But beyond that story that came overnight, which was approved by the board of directors of the World Bank, the Nigerian Stock Exchange, yesterday released its May 2020 market report. Total transactions down 7.4% over the previous month, 120 billion naira. Local investors outperformed foreigners by about 40%. Total domestic transactions up 11.5%. Foreign transactions down 33.73% in the month under review. Meantime, FBN Quest says Nigeria's bond yields will settle between 9% and about 10% in second quarter. In Senegal, the Housing Bank is paying 625 million CFA francs half-year interest on its diaspora bonds. Some headlines, but let's fire this on the electricity sector, $750 million. Uchenna, do you think this will bring power to the people of Nigeria?
Well, for the context of this interview and for us to be proper, we'll say we hope so. But Vorson, we know where this always leads to. We know where this always leads, and that's one thing that has really been the bane of our operation as a government in this country. Really, we really have to focus on
money consumption.
Yes. We're so
keep
focused
putting money
on
the electricity sector, but it keeps sucking up the money.
Exactly.
We have the German story, the German deal on the table for the Mambila project. We've signed so many. There's the Siemens deal. We've signed so many deals. The World Bank is pitching in. The EFDB is pitching in. We don't seem to get power out of this money. But you are just hopeful somehow.
Very correct, and I need to refer. I need to reference what Ali has said, and referring to Kagame's Rwanda. The problem, the difference and the clear distinction between Rwanda and the rest of Africa, and in this case now Nigeria, is the execution. Really, we don't really have plans to execute. We know we have a problem. We know we have a power grid problem, a power production problem, and we know we need money to fix this problem. But if you really have and talk about really intricate details as to how you want to fix, you realize there are no executed plans laid out. Really, it's more like, oh, we want to really see how it's going. We want to see how we want to throw money at this thing. We know we need money, but how do we need the money is the problem. We don't have those execution plans, and that's where the country always fall behind. And once you don't have all those executed plans laid out, that is where you give you give room for a lot of variants and variables that you can't really control, and that where would lead to leakages of this money just missing out. And that's the problem we have. We don't know how to execute things that we need to execute, and that's a serious problem for us, really.
Yes, you look at electricity. If this come true as planned, that's 4,500 megawatts. We're currently around 2,000, 3,000. Well, let's just go for the headline figure, which we bandied about in government circles, 4,000 megawatts. So we're talking about 8,000, 9,000 megawatts by the year 2022. We're not even up to 10,000 by the year 2022. So there's still a whole lot of work to do there. Ayodeji, thank you, Uche. I want Ayodeji to fire this up a little bit. What's your perspective on this?
I think it's always a different ball game, signing those agreements as and also implementing, which I also align with what Uchenna said. We need to be very deliberate about this. Currently, what government needs to do before we can even see that improvement, collection is also very key, because if you are not, even if you spend that amount of money to invest in power and you cannot collect this revenue, it's as good as not even, it's as good as just wasting that amount of money, because you will not be able to repay back. So
that's a new power tariff. That's a new electricity tariff in July. Next month. Yeah.
Yes, it's still, yes. It's a good, it's a positive step in the best direction. But I feel that we need to be able to also push, as we are trying to implement that cost reflective tariff. We need to be able to put all hands on deck to implement the metering of the customers. If we don't do that, the revenue leakages will still be very high, and at the end of the day, we won't be able to pay back, and the debt would also accumulate. So it's good that we're focusing on power, because for us to industrialize, we need power, and if we want to grow, we need power. So it's across the value chain. The distribution guys are really very key to making this work. So distribution of meters, we have signed the MAPS program, which is Meter Asset Providers Program. Most of them can access funding. It's also the same problem that the DISCOs are facing. So how do you want to help them solve this problem? They are levying a tax of about 35% on meter. It's better to make it tax-free, reduce this amount, rather than set up intervention fund, bring in money through another channel. You don't come and collect 35% of what they used to import. It's really, we need to be very deliberate about our action if we want the power sector to really work.
Great, quite a lot there. We'll talk about the markets. Let's switch gear. Ali, we left off Angola in that conversation a little bit earlier. So let's talk about that, squeeze that into the Southern African markets very quickly. Today in South Africa is a very big day, as the Finance Minister is expected this afternoon to talk about the budget and what it means for Africa's most advanced economy and the second largest. So the budget breakdown. Unemployment, meantime, is coming through at 30.1%. That's higher if you're using Nigeria's backward-looking data. But again, some folks are forecasting Nigeria's unemployment at about 30%, thereabout as well. Meantime, Zambia is okaying the sale of COVID-19 Eurobond to raise about $500 million, $437 million. I know, Ali, you talk about Zambia all the time, the pressure on its FX reserves. This country seriously needs money. Now that Angola has pressed the tape, where does the rest of us go in terms of debt relief and going to the Eurobond market? Meantime, Zimbabwe's first FX auction was successful, $10.34 million. What does that happen? How does that impact on the country's exchange rate? Meantime, Namibia gets a Fitch Ratings affirmation of BB, but the outlook turned negative. Ali.
So let me start with Angola first. Angola, the question here is Chinese loans, and essentially they have $21.76 billion of Chinese loans, mostly secured against, collateralized against oil. So a lot of the oil that they've been producing is kind of not throwing off any free cash flow because most of it has got to go towards servicing these loans. According to a report on the World Bank, David Malpass is saying that the Chinese have agreed to give Angola a 3-year moratorium on that $21.76 billion of debt, which works out to relief of about $3.46 billion for a full year. So what we've seen is a very positive reaction in the Eurobond market. The Eurobonds, which were initially 10-year, I think they're 8 years left on them, were trading at a 14% dollar yield and spiked to a 2 percentage point move in the 10-year bond is pretty dramatic, to be frank. So the very positive sense, I haven't seen further confirmation, Boisson, around that story. But speaking to what Uche was talking about, most of this money was wasted. You just have to look at Luanda. They got a brand new city, which is empty. The airport that was meant to be a mega airport, not a single aeroplane lands there. And this is symptomatic of the disease in many of our African countries. But positive takeaway from that for Angola, because this really has been a big issue for them. South Africa, reading the budget today, budget deficit estimates of between 13 and 14%. Worryingly for South Africa, I think that they are now have a test positivity rate of 14%. Friends in Johannesburg are telling me it's completely out of control now, this COVID problem down there. So it's very double-sided now. The economy has slowed down dramatically. Ramaphosa is seeking to open it up at the very moment when I think South Africa is now ranking 6th in the world for cases every day. So this is a very tricky situation as to how they're going to handle it, in my opinion. Turning to Zambia, goodness gracious, you've got to be insane or mad to be a buyer of those bonds. They've got less than $1 billion in foreign reserves. They are probably the worst, second worst credit or third worst in Africa today. So I don't know who's going to be buying that. I think let's keep an eye and see. But it seems to me a Hail Mary pass on the part of President Lungu. Zimbabwe, you mentioned regarding the FX rate, basically the official rate fixed at 57. Goodness knows what the unofficial rate is. Zimbabwe is an experiment. It's Venezuela now. So the question is, where does it go from here? I don't see a way out unless they can get external support. And to date, they have got none. So we could see this very dramatic moves in FX. Fuel prices have doubled overnight. And I just don't see where Zimbabwe is going to get a handle on this. So again, very bearish on that. Namibia, BB rating, negative outlook, but it's one of the stronger African credits as far as I'm concerned.
Interesting. Let me ask Uche now where he sees the global space and what's in there for emerging and frontier Africa with this debt conversation, the Eurobond market, exchange rate, the price of the dollar, and of course, the price of crude oil. Uche. Uche, are you there? Yes, please go ahead.
Sort of click. I can hear you, but I'm not exactly sure. What is really sort of, should I say, tangible is the fact that the balance sheet of the Federal Reserve is starting to shrink, and unintentionally, given the fact that during the crisis, during March, the Federal Reserve sort of extended swap lines to other central banks outside the US so as to improve liquidity situation because those banks could not really meet the supply of their US dollar within the country, and that itself has sort of created and sort of relieved the pressure of some sort during the March sell-off. But that has it's been seen to slow down, and one very important thing that has come to that is that until we are looking at the possibility that if the Federal Reserve don't significantly find a way to increase their aggression with quantitative easing, then there might be a liquidity shrinkage downwards, going downwards. And if we start having to see that, then maybe that would create that bolstering effect in the US dollar, given the fact that there will be fresh demand on the greenback, and that in itself would really have that ripple effect into the emerging and frontier market space in a higher dollar valuation. But politically, and I don't think Donald Trump will want to see a higher dollar going into the November election. And they're already thinking of implementing the new $1 billion infrastructure bill that is going to be pushed out towards the election. So
Yeah,
there is
$1 trillion.
yeah, 1 trillion, sorry. And that in itself there is that very euphoria amongst investors and market participants that we have seen the worst of the worst. Boris Johnson has just pushed out in his report, a speech a day ago, saying that he is looking to open up pubs and social gatherings in that regard.
Yes.
So that in itself, countries are looking to come out and sort of not really pay so much attention in terms of lockdown. Larry Kudlow has sort of mentioned that going forward, that they have made it quite clear that there won't be another lockdown. So
Okay,
if that is, yeah.
A quick one, Uchenna, here is about the price of Brent, which is about $42 a barrel. Do you think that Brent is locked now around $40 a barrel for the short term? What's your take on that? And how soon do you think it will either go up or trend lower?
I think I've not changed my stance. I think yes, we can still wiggle upward couple of dollars, but the risk reward right now is sort of risk skewed towards the downside. And even OPEC themselves understand that. They understand the fragility of that market right now, and it is based on the fact that we don't want to see another sort of shock in terms of any form of closure or any sort of significant spike in coronavirus cases. Because if that's the case, and it's clear right now that OPEC and OPEC Plus are in the place whereby feasibly and practically they might not be able to implement production cuts and quota going forward. People like Nigeria, Iraq, Kazakhstan have sort of not meet up their quota, and it's not like they are not trying to meet up their quota, but practically there are just some things that can be done as regards to production cuts. So I still see another leg lower, and that in itself would cause commodity-based currencies and countries that are highly dependent on commodities like the South African rand and the Nigerian naira would really get a significant hit if we get to see that for that leg lower.
Interesting. So let's just squeeze in North African markets. Just a quick review of some of the top stories from there. Then we'll get back to Ayodeji to talk to us about Nigerian markets with the report from the NSC. So the EGX, that's the Egyptian stock market, finished up yesterday a little bit in the negative territory, but the country's full year 2020-2021 budget deficit may decline 6.3% of the GDP. Meantime, Dice Sport, which is listed on the EGX, on the Egyptian exchange, reports 43.26 million Egyptian pounds net loss in first quarter. In Morocco, the country gets about $500 million from the World Bank for digital and financial inclusion. And on Tuesday, the Morocco stock index down 0.52%, led by Saham Assurance. That's with about 4% on the general index. So let's get back quickly. I'll ask Ali to weigh in on the North African market, Egyptian story there. But quickly, Ayodeji, what's your summary of Nigeria's stock exchange report about the increasing size and pace of local investors and participation in the market vis-a-vis foreign investors and participants in the month of May?
Yes, it's interesting to see that the domestic investors are now taking control and dominating markets, because that will reduce some form of volatility that we always see when the foreign investors are pulling out. But if you look at it on a month-on-month, total activity reduced compared to April. I think by about 24% compared to April. But the continued domination of domestic investors is positive for our market. Beyond just about performance of the market, we all know that even for Nigerians, we need to begin to develop that culture of saving and investing. So once we begin to acclimatize ourselves and get used to that culture of investing, one, we're increasing our ability to create wealth, because you see there are stocks that pay consistent dividend over time. Then that would improve for the individual standard of living. But for the stock exchange, I believe that it's to also be able to sustain this percentage is still very early for us to rejoice. If we check on a cumulative basis for the year so far, is about 59%. But getting to 70% and we're able to sustain that will be very positive. So what the stock exchange will need to emphasize on, intensify efforts more on, is investor education. Let them understand. We have a lot of young guys that play FX market that they don't even understand. If we are able to come up with devices, investor education that would also enable them to be able to simulate this market, then it will create a lot of awareness. And as we progress, we will begin to see improved appetite even from the quoted companies. We've not seen public offer in the last 4 or 5 years. With only very few rights issue. So if we begin to see that there's appetite as the economy grows, we can see the sustainability report is planned. Implementation of that would also boost activity maybe in the next 2-3 quarters. So if for those that if we see increasing interest in the market, and lastly, to end with this, the stock exchange, to encourage people to continue to invest, the process of getting dividends and bonuses, especially dividends, is still very manual, and that is what is resulting to the unclaimed dividend that continue. You still have to fill form after buying in the secondary market. So the stock exchange needs to simplify this process such that it would encourage investors to continue to buy, and they don't need to fill any other form for them to get their dividend.
Interesting. Thank you very much. Food for thought there. Wrap it up for us on the North African market, Ali.
So I think, I'm, as I've said previously, quite bullish about Egypt, and I think the currency's been well behaved. I think the stock market will underperform the fixed income market. So if you're looking for exposure into Egypt, I'd look into the T-bonds, I'd look into the government securities for now. But I think once you get that tide of liquidity come into the market, you're going to see a good reaction in the equity market. Obviously, there is a geopolitical issue about investing in Egypt, and that is this very big fracas between Egypt and Ethiopia about the water supply and the Gerd Dam. So bear that in mind if you're an investor, that there has been a lot of very aggressive language, and that both sides are currently in very entrenched positions. Egypt is entirely dependent on the Nile, and Ethiopia, of course, is saying we cannot develop unless we have power, and the Gerd Dam is part of that power strategy that you were talking about earlier.
Thank you, gentlemen. We appreciate your being on the show today. Ali Kansacho from Rich Frontiers Management in Nairobi, Kenya. Thank you so much. Uchenna Minis from Blue FX Nigeria in Lagos. And of course, Ayode Jebo, the CEO at Afrinvest Securities. We'll see you again tomorrow, Thursday, the 25th of June. Have a great day, everyone, and bye for now.